Morning, everyone. Thank you for joining us for another Minnesota Matters. My name is Tess Rice. I'm MBA's General Counsel. And before we get started here, I just want to remind you, if you have any questions, just put them in the chat and we'll do our best to get to them. And then I also wanted to just take a quick second to look at our website and just remind you of some of the free resources we have on there. This is under that legal and compliance page. So we have our bulletins on there. You're probably familiar with those. Those are a subscription service. And it's free, but if you want to get those, you just subscribe to them. And those cover hot topics. And then we have our Reg Watch bulletins. Those cover all the regulatory changes for the past month. So those come out monthly and you can subscribe to those as well, or you can look at them on the website here. We also have our case watches on there. So those are cases that relate to banking. We do send out those summaries when they come out, but we also have them on the website and you can search if you're looking for something as far as case law. And then there's legal Q&As on there. Those are from our magazine, but Keith does a Q&A and those are all on there. So you can search for those too. Same with the compliance queries. Those are compliance questions that Tom has answered. And so those are available to you if you want to search for those. And then finally, there's compliance companions on there. Those are compliance cheat sheets. They also cover things like check fraud and stuff like that. So check those out. A lot of bankers really like those. Today, we'll start with Teresa Kuvas, our government relations manager. She's going to cover what's going on in the at the legislature. And then we'll have Tom cover a couple topics he's seeing on his auditing jobs. And then after that, we will have Keith cover some Q&As, questions that he's been getting from bankers. So I will turn it over to Teresa.
Wonderful. Good morning, everyone. As Tess is pointing out some of the things that are on the website, one thing to note during the legislative session is every Friday, we do send out a political insight. So that will kind of give you an idea of what's happened that week in the legislature and what's coming up and any bills that are introduced. So that's kind of the best place to get information during the legislative session. So now to kind of go to the legislative session, they began the legislative session on Monday, January 31st. In the second year of a biennium, they get to choose when they come in. In past years, they haven't come in till mid-February. They've come in as late as the beginning of March. We prefer them to come in later than earlier. There's not much that they really need to get done this year, as it's not a budgeting year. So a lot of stuff this year is policy, but with it also being an election year, that ends up being a really big focus, as a lot of legislators will introduce bills and want to pass bills that will help them in November. Constitutionally, they need to be done by May 23rd. There's rumors that they'd like to get done early, but there are rumors every year that they'd like to get done early. So we'll see what ends up happening with that. A couple of the hot topics at the Capitol this year. Obviously, we have seen an incredible surplus, larger than we've ever seen. We're kind of used to seeing deficits at this point. So the fact that there's a $7.74 billion surplus gives the legislature a lot of money to spend. And when you have a Democratic House and a Republican Senate and a Democratic governor, it's going to be really hard to find a consensus on what can get accomplished and what needs to get accomplished and how much of that will roll over to the next budgeting cycle. I was at a dinner on Monday night, and when asked the four leaders how much would be remaining after the session, it was all over the board. Some were saying, there could still be $5 billion on the table at the end of session for next year, just because they can't come to an agreement. One of the things that most people do agree that needs to be done and done early is to refill the unemployment insurance fund. During COVID, that was obviously depleted, and there's, many businesses have started to see letters coming in that they are going to be required to help refill that, regardless of whether you furloughed or let go or had to put employees on hold for a while. Everybody was going to get hit with that. So that is one thing that the governor actually has in his budget proposal has put more money than even the Republicans put in for that unemployment fund. So that is something that's going to likely get done early. There's the House that has talked about if we do unemployment insurance fund, which actually is going to be on the House floor today. In addition to that being on the House floor today, I believe there's also, they want to deal with the frontline worker pay. And then also, they also want to kind of bring in some family medical leave stuff as well. So if it can get done, purely just the unemployment insurance fund would be nice, but there's always the likelihood that there could be other trades going on with that one. Number two, but actually number one to legislators this session is redistricting. February 15th is when the legislature is constitutionally supposed to have district lines drawn for the November elections. And it's been 60 years since the legislature has been able to do it. So starting last summer, there's been a panel of judges that have been already hearing cases and working to make sure that come, February 15th, 16th, the lines will be drawn so that people know who will be running for office in those districts. So that is definitely going to be a huge thing that happens at the Capitol because nobody knows what their lines are going to look at. We met with the Senate Commerce Chair last November, and he said that he has the most, he has to pick up 10,000 constituents. So he has to, his district's going to grow. And then, we were talking to somebody from the Lakeville area, or actually Chanhassen, and she's got a district that has to lose. So that's all about drawing those lines. We are seeing a lot of retirements and movement already. Next year, in a year after a redistricting year, there's normally about 1/3 of the legislature that is brand new. So that is something that we're also looking at is there's a handful of people that won't be back next year. So redistricting is obviously incredibly important to all of these legislators. Public safety, that is probably, even looking towards November of for the November elections, public safety is going to be probably the number one issue is people feeling safe when they go to the grocery store and, just go out and live their lives. And that is going to be a big thing that the Senate and the House are both going to look at this session. They're both going to look at very different ways of approaching it. So whether something can get accomplished or not, again, is really questionable this year. There will be continued COVID conversations, the frontline worker pay, which kind of trickles into the labor shortages and healthcare and everything. So that will be on tap. And then bonding, the second year of a biennium is normally a bonding year. So the governor has already, I think his proposal was 2.5 billion. The Republicans definitely won't want to come in with that much money. For a bonding bill to pass, the minority is going to be needed because they need to have, I think it's 3/5 or 2/3 of the votes to pass a bonding bill. So there's a lot of say that the minority has in that bill as well. So my assumption is it'll be probably 1.5 billion will probably end up being what the bonding bill will end up being. So I know that on the earlier slides, there was a bank day slide in there. I know that Renee is going to drop in the chat the registration for our bank day at the Capitol due to all of the COVID restrictions in St. Paul. And, one thing is the Minnesota House is going to be meeting completely remote again this year. They have shut down the state office building, so nobody is allowed in the state office building. The Senate, the committees, their committees are hybrid, so some are in person. You can get to the ground floor and the first floor in the Senate buildings, but you can only get in to see a senator if you have an appointment, and you have to be escorted. So it's incredibly difficult to kind of figure out a bank day at the Capitol that would allow us to meet in person. And now that St. Paul has additional mandates, it just made trying to get it in person more difficult this year. So we are going to do it on March 3rd. We're going to do it virtual this year. It is free, so the information is in the chat. As for banking issues this year, the MBA has already introduced a special revenue fund bill, which is just, we've been working on this bill, which is how banks, our regulation is within the financial institutions division at the Department of Commerce, and their funding sources haven't been properly funded. There's money that's been going into the general fund and not coming back into the special revenue fund. So our goal is to fix that this year. It requires bringing some money back from the general fund. As I mentioned, there's a $7.74 billion and possibly growing surplus that if we're going to be able to get some money out of the general fund that shouldn't have been there in the first place, this will be the year that we should be able to make it happen. We have the Department of Commerce helping, being supportive as they should, because this is something that they should have addressed years ago. So we are working on that. Other things that we're watching, privacy, we'll continue to watch privacy. We believe that the House will try and continue to move some kind of privacy bill based off of California and some other states that have started to look at it and move it, but we don't suspect that the Senate will want to do it at all. But there's other things that we'll be watching. They'll continue to pop up in bill introductions, and we will. So just check on Fridays. It'll be probably Friday afternoon that those updates will come out, and all the information that you'll want to know. And if we need people to call into legislators, that will all be included in those Friday political insights. So with that, I'll hand it back over to Tess or over to Tom then.
Tom, are you ready?
I'm ready. Yeah, so I'm just going to run through three things, really. Three topics. First two, some issues that have come up just within the state and things that I've been seeing. The first one related to Minnesota Statute 48512, which is about transaction accounts, primarily checking accounts, but also money market checking accounts, anything that has the ability to write a check against the account. So anytime you're opening an account or adding a signer to that, you have to get certain information covered by CIP, but then you have to get additional answers to questions under the state statute. And then you also have to confirm that information. And that's where the issue comes in. Deluxe Detect is apparently ending its confirmation services for this aspect. So it's what you're confirming is typically the closure of an account involuntarily, and that kind of information. So with Deluxe Detect ending their service, check systems is the primary replacement. There's apparently a significant cost difference between the two, with check systems being higher. Some other places you might check to get a replacement service would be with your core system. Occasionally they do have service or a third party that they deal with. And as addition to any other consumer reporting agencies that you deal with, since check systems and Deluxe Detect, when they're doing that, they're acting as a consumer reporting agency as well. So that's a fun news. Another thing that's come up, this BSA
Oh, Tom,
related.
could I interrupt you just for a second?
Yes.
48512, just to clarify that's for state chartered banks.
I'm sorry?
That 48512 applies to state chartered banks, right?
State
So
chartered banks, yeah.
it's not something that national banks have to do, like the
Yeah.
check systems check and all that.
Yeah. And then, yeah, so going on to BSA, this is just something I've seen out and about. A lot of banks, it looks like, have moved to OFAC's free sanctioned list search website, which is perfectly fine. They're the holders of all those sanctions lists, so it's good resources to go to at a great price point, being free. But just so you know, when you go to that sanctions list search site, too many S's, difficult to say. When you go to that site, the minimum name score, which would be below the fields where you're filling out information on the individual or entity, defaults to 100%. So it'll only match if you get the name exactly the same as what's on the list. So what's recommended is to move that default name score down to 75 to 80%. So that could really be a training issue for your frontline staff or whoever's accessing that OFAC sanctions site, just to make sure that every time they do it, they have to go down and move that minimum name score from 100%. It's just a line that you can just click on and move it, move the percentage down. So just to move that percentage off 100% and more to about 80% or something around there, just to make sure that you get, if you miss a middle initial or something like that, or middle name, or, it's slightly misspelled, or it's, John rather than Jonathan, things of that nature, that you're getting potential matches that you should be seeing. I still don't see too many potential matches. I run a couple tests on names that have been entered, and really when I leave it at 100% and then check it again at 75%, I'm still getting no match on virtually all the ones that I enter. It's very rare to find an actual match that's a legitimate OFAC match here in Minnesota. And then the last thing I want to touch on briefly was just also related to BSA, but FinCEN's recent proposed rule on beneficial ownership. So that came out in December, and the comment period is actually due on Monday. If you wish to comment, you need to have it in by this coming Monday. But what it does, this first rule creates a registry for beneficial owners to be maintained by FinCEN, and it would require the entities themselves to report the information directly to that FinCEN registry. So the bank wouldn't have to record the information and keep it, that sort of thing. But this is the first step of 3 and related to the current beneficial ownership rule. So they've got this one, setting up the registry. The next rule is going to deal with access to the registry and disclosure of the beneficial ownership information. And the final one will revise the FinCEN's current beneficial ownership rule in 31 CFR 1010.230. That's where the current beneficial requirement resides. But it really follows the same requirements that banks currently have to attain. You have to get name, address, date of birth, a unique identifying number, which they always give the example of a passport. But one thing that's also in there is FinCEN can issue identifiers themselves, and that can be a situation if there's a reason that an entity doesn't wish to provide that information. They can provide they can apply for and obtain a FinCEN identifier that they will report instead. Some of these things, since it's requirement of legal entities, once the rule is final and effective, any entity in existence before the effective date, they'll have 1 year to report all their information. And then if they're a new entity after the effective date, they only have 14 days to submit the necessary information. So what this does is something from the Corporate Transparency Act from 2020, I think it was technically, it'll eventually relieve banks of having that burden of obtaining and verifying current information for beneficial owners and obtaining and retaining it as part of their BSA program. So, what exactly you'll have to retain once you get access to the new registry is yet to come, but it's still down the road a little bit. So you still have to adhere to those beneficial ownership requirements for the time being. And that's all I have.
Thanks, Tom. Keith posted a link to that OFAC sanctions site Tom mentioned. If you want to take a look at that in the chat.
Yeah,
There's
it's
also
good.
a
Lots of banks
comment.
are using it.
Good. Okay. We're going to turn it over to Keith. As most of you probably know, we, meaning mostly Keith, answer thousands of questions from bankers every year. So Keith's going to just talk about some ones that he's had recently that he thinks are interesting. So ready, Keith?
Oh yeah, I'm ready. Well, thank you. So yeah, I picked out just a kind of a few questions that we had been asked recently. Actually within the past months, just because I thought these ones were pretty good. So the first question that I got from a banker, and I've had a couple of bankers ask me this question, so I think it's probably a good time to talk about it because there's kind of a misunderstanding a lot of times with the lenders at a lot of the banks about the appraisal and evaluation requirements. So when you have a mortgage that's under $400,000 or less, a lot of lenders kind of think you don't need to do any sort of appraisal or evaluation. And the rule for this is 12 CFR 225.63. And that's the rule that they're thinking of in this situation. But it says in there that there's an exception for an appraisal under various different types of loans, one of them being $400,000 or less. However, it says that for that transaction, that's not required to have this state certified appraiser appraise the house. The bank still has to get an evaluation. So however the bank decides to do an evaluation for that, just has to follow safe and sound banking practices, and whether it's an internal evaluation that the bank does. So it's kind of easier to think about it as two things. Either the bank gets an appraisal, and it could do that, for loans that are under that amount anyway, or it has to get an evaluation, but it can't just not do anything. You can't just skip doing an appraisal or doing an evaluation entirely, because that would be a violation and it wouldn't be a safe and sound banking practice to just skip it entirely. So I thought that was a pretty good question. And I have had a couple of banks ask me that, and thought this would be, good time to kind of clear that up a little bit. So that's the difference, I guess, between having the lenders read a regulation and have somebody in compliance read a regulation. So it's always good to make sure you guys clear that up with the lenders to make sure that they're actually following it properly. And another good question that I had, because there's a lot of cannabis questions that sometimes we get. And so one of them had to deal recently with CBD products. And I'm sure everybody's seen these kind of all over the place, whether it's a store selling CBD oils or CBD gummies or whatever it is, whether it's like pet products or for humans or something. And there was kind of a recent cease and desist order that the Minnesota Board of Pharmacy had issued saying that there were certain products that were illegal. And it brought up an interesting question about whether CBD products are entirely illegal or not. And the answer is no to that. Minnesota did create a statute a few years ago. It's Minnesota Statute 151.72. And in there it says that these products that are derived from a cannabinoid, I have a hard time saying it, those are legal. They can be sold here for human use and consumption and animal use and consumption, so long as they have some various testing requirements that are in the statute and then some labeling requirements. So if they follow the testing and labeling requirements, they are legal. They can be sold here. It's just that sometimes some of those products didn't really meet that requirement. And so the Board of Pharmacy in the statute was given authority from the legislature to oversee this product. And that's why the Board of Pharmacy is the entity that issues the cease and desist order and reviews those products. So that particular cease and desist didn't say that all products are illegal. It's just that the ones that they were talking about were probably illegal. So there was I think some court action that happened afterwards to dispute that order from them. But overall, CBD products, those are legal here in this state because of this statute. Moving along to another good question that we had before that has to deal with all the banks and business customers is a continual annual registration for a business entity. So you have a lot of business accounts, whether it's an LLC or corporation or something like that, and they create that entity by filing with the Minnesota Secretary of State. But then each year they'll have to do an annual renewal. And so all of those, that should be kind of part of the bank's annual review process for its business entities to make sure that they still have filed a registration with the Minnesota Secretary of State. So what happens if they don't do that? They go through what's called an administrative termination or dissolution. And basically, from a legal standpoint, that business no longer exists. And that is important for the bank because really you have then an account with a corporation that no longer exists. And it's mostly an issue actually for the people who own the business, because the entire point of creating a corporation or an LLC is to limit the liability of the owners. And so if you have a single member LLC, for example, and the person didn't file an annual renewal for their registration, that LLC no longer exists, and they're essentially operating a sole proprietorship, which means that if something goes wrong in their business and they're sued, then they would be directly liable for whatever the action could be. Now, what will happen though is the entity can then file again to register, and it's basically retroactive. So it will go back to when the business was administratively terminated or dissolved, and then it'll just continue to exist. And any actions that happened between that time period when it was administratively terminated and when they filed that registration again will be determined to be actions of the company again, rather than say that person acting as a sole proprietor. So it's just retroactive, and it happens a lot of times in these small, closely held businesses where it's one person and they forget, and they might forget every single year to do this. So they could continually have these administrative terminations. And you can see that in the history on the Minnesota Secretary of State's website, because when you type in a business, it'll come up with all their filings for that and everything. And you might see sometimes you have an entity that has, every single year they're administratively terminated, and then they reissue it, a month later or 2 months later or something like that. So it happens. Some people just aren't really on top of it. Another question kind of related to the business entity one that I had, and I've had a couple questions on this one, is related to partnerships, whether it's general partnership or limited liability partnership. And the issue related to this is what happens to a business partnership when one of the partners, whether it's a general partner or a limited partner, leaves the partnership, and whether that action by departing the partnership dissolves it. And so generally speaking, when you have a general partnership or limited liability partnership, there needs to be one general partner, there needs to be one limited partner. If a general partner or a limited partner leaves and they disassociate with the partnership, there is a time period, it's 90 days for a limited partnership. And I believe it's also 90 days for a general partnership as well, for when that partnership needs to appoint a new partner in that space. So you can't have a one-person partnership. That's not a partnership. So they would have to have a short period of time for when they would actually need to appoint somebody else, or they're going to have to change their business structure to something else if they can't find somebody else who's going to be, a general partner or a limited partner. But if you have a general partnership, you need to have those general partners. And if you have a limited partnership, you need to have one general partner and one limited partner. So that's kind of an important distinction. Another good question that we had, and this one was related to escrow accounts. And this one also been asked several times in the past. And the bank wanted to know if they could force a borrower to pay their taxes and insurance into an escrow account because they failed to pay their property taxes on time. And the answer to that is yes, that can happen. So this is authorized in Minnesota Statute 47.20 and then subdivision 9E. In there, it says that normally a bank in Minnesota has to give a borrower a right to discontinue an escrow account after 5 years. And a lender can always require an escrow account initially, and there's lots of exceptions. But this is very much in the bank's interest, because not paying property taxes would be a reason that the property could be foreclosed, and it would affect the bank's interest in that property. So a bank could then force them to open an escrow account, and this does happen all the time. And the last good question, I actually got this question yesterday, so it was kind of good timing for this, because very interesting one related to checks. And if the banker's on this is a good time to talk about it. But what happened in this situation was the bank's business customer fired an employee, gave them their last check, and then the employee a couple of weeks later said to their former employer that they lost the check and they would like a new one issued. So the business then reissued them the same last paycheck again. And then the former employee cashed those at a check cashing business. I'm not sure if he cashed both of them, but he certainly cashed the first one that she claimed was lost. So the check cashing business then came to the bank saying that they wanted to be paid the check. And when the employee told their employer that they lost it, the employer went to the bank and issued a stop payment order on that first last paycheck. And so that paycheck then is argued by the check cashing business that they are a holder in due course and are able to be paid that check. And generally speaking, that is true. They are entitled to that money. So a holder in due course, and this happens a lot of times with check cashing businesses. It's kind of why they're one of the worst businesses. Then that's why they always do that with payday loans and everything. So they are a holder in due course. They take that check free of any issue related to the initial payee and the drawer of the check. So they are a holder in due course. There is still a valid stop payment order on it. But really what's going to happen is that check cashing business is going to sue the account holder directly. This is not the bank's problem. And Tess and Tom could correct me if I'm wrong on this, but it's not the bank's problem. There is still a valid stop payment order that happened before the check came to the bank. But the check cashing business has a claim against the account holder directly. So the account holder is going to have to pay that second check to their former employee, and then they're going to have to pay the exact same check to the check cashing business. And then the employer is going to sue their former employee is actually what would be the result of it. But being a holder in due course is, a very important aspect under the UCC for checks, and it's the entire purpose is to improve the credit system of the United States. So that is why a holder in due course has this large power that even can go over a stop payment order. So that was a very good question, and it's something that does happen quite a lot. So there's some interesting cases related to this exact scenario, and I thought that was a good one to talk as well. But those were the few questions that I had to go over, Tess. So I can't think of any off the top of my head right now that would be good to go over.
Yeah, that check cashier one is something that you see a lot over the years. And like Keith said, there's good case law on that, not good for us, but that explains how everything works. So it's very clear what the court thinks those statutes mean. And check cashiers kind of have some superpowers there, which is real nice for them.
They do.
But that's always an
it is
issue.
good for them.
Yeah. So that is all we have for you today. If you have any topics you'd like us to cover in a future Minnesota Matters, just email one of us and let us know. And I hope you have a great day. Thanks.